Hey everybody, it's Pete. Good morning. Happy Monday. Hope everybody had an awesome weekend. Thank you for joining me today on Stocks for Breakfast. We got a bunch of stuff to talk about. Obviously, Facebook earnings today. There's a whole storm around Facebook right now. We have some news on Tesla. We have some news on Tesla competitors. We're going to look at two different things. We're going to talk about some tech stocks that have been strong lately. We're going to talk about two other sectors that we're looking to buy. Actually, three, really. But we're going to focus on two main ones. We're going to jump into those. And we have some swing trades that we're looking to set up. Also, I've got a lot to talk about today. I want to go over two different trade setups last week that were identical. One of them did absolutely nothing. We didn't even get into the trade. The second one actually ended up getting filled and moving in our favor in a big way. And I think it's something that a lot of people just need to understand, like that last little part of the trade. Because remember, there's your edge. You do your scans. You put together all that raw material of stocks that you like. For example, we're going to take a look at some ideas today. But then they still need to do certain things before you actually place a trade. And just something that's a little advanced that we spend a lot of time in our private coaching calls talking about, which is order types. It's shocking to me how a lot of people who are very active traders don't know all of the types of orders that are available to them and even how to use them properly. Something as simple as the difference between a buy stop market order and a buy stop limit order. First, a lot of people don't even know to use a buy stop. They only know a stop loss to get out of a trade. But probably 80% of our orders are on stop orders to get into a new position. And the difference between a buy stop limit order and a buy stop market order is pretty significant. So we got a lot to cover today. Obviously, I want to thank you for joining me. We're going to talk about a lot of stocks we're looking to buy today. So stick around. I'll be back in just 1 second. Okay, so obviously everything we talk about here is for educational purposes. It's up to you to make that final decision. However, it's my mission to help you make better decisions, and I really hope that we're doing that. If I could just ask you for one small favor, if we provide value today, if you love what we're doing, only if you love what we're doing, smash that like button, hit the subscribe button. I'd really appreciate it. You'll get updates and also let me know that you're enjoying the content, but more importantly, that I'm actually helping. That's the whole reason we're all here at 7:30 in the morning. We want to help, right? Let's see. Tom actually has a follow-up. Let's take a look. Some of the issues with order types is how to execute them within your chosen software. Sometimes you think you're doing one thing. Yeah. Actually, Don, it's funny you say, Tom, excuse me. We actually have a lot of new members who come through the boot camp, and we get a lot of feedback. And one of the biggest, the two biggest issues that we are now building into the orientation of the boot camp. The first one is setting up the software properly. And we actually had a question from LJ about that in the Facebook group that we have. And it's actually, should you start trading until the software is set up? So we're actually building in live success path sessions on setting up the software. And we're also going to have a session on understanding the types of orders and how to set those orders up properly. There's OCO type orders, there's bracket orders and all that kind of stuff. So in case everybody, this is a really good point from Tom, and we're actually addressing that in the boot camp. If anybody happens to join us, you can learn about that in the link below. It's a big deal because, look, let's face it, you can know everything, but if you can't place the orders that you need to place, very frustrating, I would guess, right? So if you're looking to buy a stock and you're not exactly sure how to place that order, it can drive you a little bit crazy. Okay, so I want to get in there and make sure that we cover everything. The whole reason that everybody's here in the morning, we want to talk about some stock picks. We want to talk about sector rotation, which is what we do every day. But first, I want to say hello to Winnie. Winnie, good morning. Hope you had a absolutely awesome weekend. Love having you in our community. I really appreciate it. Let's see, Napoleon. Every time I see Napoleon here, I think of Napoleon Hill. Big part of my career, my big part of my mindset, actually. O'Neill says 3 to 4 stocks move with the broader indexes. I would say so. You know, John, it's actually interesting. When we build out the entire strategy of what we do, we have the stock market power pyramid, and maybe I could even show you like a sneak peek, because we're actually rebuilding all of our training. Actually, all new training is coming out, and I'm going to give you a sneak peek into what's going on right now. And a part of the question that John just brought up is actually this. I'm actually going to put this in here. I'm giving you a sneak peek. Nobody in the world has seen this before. So I'm going to take a look right here. And if I zoom this in a little bit, I just wanted to give everybody context. This is actually John's question here. 3 to 4 stocks move with the broader index. Is that correct? And I'm going to say, yeah, absolutely. So if you can see what we're working on here, and again, don't tell anybody, this is brand new. I haven't even shown this to anybody yet. So if you see on the bottom of the screen here, we call this the stock market power pyramid. So if you get to John's question here again, which is a really good one. So thanks for bringing that up, John. We start out with the bottom. We want, and there's a very specific reason that this is a pyramid. And I want to bring this up here. I promise you we're going to get to stock picks. I absolutely promise. But this is very important because this is the foundation upon which all of our trading ideas. If we decide to buy a stock, you really want to have massive conviction in that. So the power pyramid has at the bottom of that foundation, it's a wider foundation because it's more that you could lean on. And essentially we're talking about the 3 major indices. Then we have the next level up. And here's what I want you to be thinking about here. And I didn't mean to turn this into a training session, but look, we're going to learn, right? Might as well do it. You want to have everything that we do. Remember the 3 pillars, right? There's stacking the order flow, tape reading, and risk reversal. What we're talking about now is both stacking the order flow as well as tape reading. But what we're doing is we're looking for as many reasons as possible to choose to accept risk and have a high likelihood of following through to hit our profit target. So as we work our way up, you need to decide how many of these pieces are in place for you to have conviction. That's going to affect your profit targets. That's going to affect your position size. It's going to affect how you get your position size. So the further up the pyramid you go with the foundation underneath it, you should have more conviction. So you start out with the market. Let me actually make that a little bit bigger so you can actually, if you want to take a snapshot of it. So you start out with the market, then you move up to sectors, then you move up to individual industry groups, and you move all the way up to stock specific ideas. So just that one little thing brought on John's question. We kind of went behind the scenes and we'll give you a sneak peek of some of the new stuff that we're coming out with this week, actually. So if you want to take a snapshot of that, I'll make it bigger for you again. I want to make sure everybody has full access to that. There you go. If you want, you can actually take a screenshot of that and you'll have that for yourself. Okay, so I'm actually going to minimize that so we can get right into the whole reason of why we all came here today. So obviously Facebook earnings are a really big deal right now. Facebook, if you haven't been keeping up on it, Facebook is just getting absolutely bombed right now with bad news. This is actually an article in the Wall Street Journal right now about how they are regulating or trying to regulate politics within their ecosystem, which is very hard to do because they're trying to balance revenue with, I guess, doing the right thing, for lack of a better way of putting it. But we also have Facebook earnings. Earnings is coming out today after the market closes. And what we want to point out here is this. This right here was the last Facebook earnings. And we actually had mentioned that when the earnings came out, if you happen to be a member of the community at that point, when earnings came out, they were actually good. They were actually really good. But the problem was they were competing with the height of the pandemic. So everybody was home. Same thing with some of the financial companies where everybody became a trader. They were opening up thousands and thousands of accounts during the pandemic. Everybody was buying stocks, moving over to crypto and going back and forth. Facebook's numbers were actually pretty good. Facebook was actually hovering recently at all-time highs until the market pulled back. This bad news with the whistleblower started to pile on. So the question right now, is Facebook stock a buy now or after earnings? I wanted to point something out because we've actually talked about this quite a bit in the past. And members of our boot camp asked this. And Don Maxwell, I don't know if Don Maxwell is actually on the call with us right now, had a trade in Netflix last week, and it was ahead of earnings, asking whether or not he should be holding that position into earnings. And so now we're going to give context on Facebook's numbers, and we're going to talk about Facebook trade into earnings and whether or not you're holding it. Obviously, there's this giant black cloud over Facebook stock right now and whether or not you're buying the stock right now. Actually, you know what? We're going to talk about DWAC in a second. Okay, we're going to talk about that. That's actually a good conversation to jump into. But here's what I want to talk about. We've mentioned quite a bit as we've been covering the earnings season with this monster tech earnings this week. So make sure you're with us every day this week. There's 2 things to pay attention to. There's the lazy number that everybody puts on the top, which is, let me actually zoom this in so everybody can see that. Actually, I don't know if you can see that. I'll make it bigger in a second, which is earnings per share. There's just that top line number. Earnings per share, what was the number? Did it beat? There is revenue. What was the number? Did it beat? That's kind of like going one level. We need to go 2, 3, 4, 5 levels deep. And just to give it a little bit more context, it's the growth numbers that are important. Obviously, we're comparing last year, but what is the growth percentage? That's the first layer. So we go one layer, it's 2 layers. The third layer is what was expected. So we saw a couple of stocks last week, IBM being one of them, where IBM stock and the numbers did exactly what was expected, but that's it. And that's why the stock imploded. You can see the stock actually tried to find a bid, and then they reported and just absolutely got crushed because it was like, nothing exciting. So what we're looking for in Facebook is we are looking for the growth numbers, and it comes out after hours today. We are looking for the growth of sales compared to a year ago. We're looking for the growth of subscribers from a year ago. And we are looking for the growth of their margins to change. So growth in revenue, growth in margins, growth in subscribers. Obviously, in any kind of these kind of communication services and whatnot, subscriber growth is everything, right? So what am I looking at? What am I expecting? Obviously, this news is not great that's hanging over Facebook right now, right? This internal chatter, the whistleblower, everything is bad. But that's behind us. We're looking to trade what's going on now, and we're buying the future earnings. Remember, we talk about discounted cash flow analysis quite a bit. When you're investing and you're looking for shareholder value, you're looking for the value of those shares to be more in the future. So when you do a discounted cash flow analysis, you're discounting today's cash flows back from the future to justify today's price. So what does that mean for Facebook, right? What does that mean? Well, if we just look at the chart, we can see that we're kind of stuck in this box right now. This is the downtrend from the market selling off. It did not rally with the rest of the market. The whistleblower news has been creating a firestorm. I don't even know if there's any other way to say it. I actually am expecting good numbers from Facebook. I am actually expecting the stock to not go down. Now, here's the thing. We saw this in a couple of the financial stocks, and specifically JP Morgan, where the numbers came out. And we were very clear about this. We actually said this about Tesla as well. And we're going to talk about Tesla in 1 second. We said that the numbers weren't blowout numbers, but let the numbers digest a little bit and see what happens from there. And then you can see after the initial move down, which is here, after the initial move down, earnings came out. Let me actually make that a little bit bigger for you right there. So right here is where the earnings happen. Numbers came out. The stock opened lower. Numbers got reanalyzed, or I should say analyzed in a little bit more detail. And this is something important because I want to get across this. The initial reaction off of earnings per share, the initial reaction off of PE, the initial reaction off of revenue is this compared to that. That's where that first reaction comes from. Then the smart money starts to dig in a little bit deeper. They have more than 12 seconds after hours. If you've ever traded after hours, you know stocks are going crazy buying, selling after hours. You can see they're going like this, which, by the way, I don't suggest anybody who's brand new to trade after hours, especially during earnings. It's just a low probability situation. That's just my belief. That's my history, I would say, to speak, from teaching people. But that's a whole other conversation. So JP Morgan initially, when the first numbers came out, it went down, and now you can see it's actually – oh. German, Spanish, French. My iPhone just picked up on something I said. Hang on. Korean, Brazilian, Portuguese. How funny is that? My iPhone's all the way across the room, and it just picked up translating what I'm saying. That's funny. Anyway, sorry about that. So that's what actually happened with the JP Morgan numbers. And now you can see, actually, you might want to write that down. JP Morgan is one of the top stocks I'm looking to be a buyer of today, because if we move this back, you can see the levels that we're at right now. So JP Morgan is one of the biggest trades that I'm looking at today. By the way, eBay is today as well. If you didn't happen to see eBay last week, that's what eBay did on Friday with monster volume. So we're looking for follow through actually in eBay as well. So anyway, let's get back to Facebook. So you saw the reaction that JP Morgan had after the earnings. You saw the reaction that Goldman Sachs had after the earnings, where they opened up and rocketed higher, and they're still going higher. 415, 416 in Goldman Sachs at the level right now. That's what we're looking at in Facebook right now. Don't just look at the bad news. that's in the stock right now, because that's really not affecting the future discounted cash flows, the future revenue that we're looking at. Last quarter was pretty good, even though they're even on top of the fact that they were fighting the previous year, which was amazing. Because remember, year over year, percentage growth, that kind of thing. They're expecting better numbers right now as well. So we're all going to bet with our wallets. We're all going to bet with our pockets. If those numbers come out good, if the growth rates are good, that's the big thing to pay attention to after hours today. I think we're actually going to finally break this move to the downside in Facebook, and cooler heads will prevail. They'll end up fixing the problem that they have right now, and we're probably going to see higher prices. So remember, there's going to be that initial reaction, and then there's diving into the growth rates of those numbers. So those are the big ones, okay? Earnings per share, growth rate percentage, cash flow growth percentage, revenue growth percentage, and then subscriber growth. So those are the ones you got to keep an eye on today before you look to buy Facebook stock. I do want to hop on over and want to take a look at a story in Tesla today. This was big news. I don't know if you've seen, there's been news about somebody who was writing up a lot of bad stuff about Tesla on Twitter. Turns out she was actually being paid by Tesla competitors. And interesting now, the arguments were about self-driving car and the self-driving car crashing. So literally the day after they announced new updates, they've actually pulled it because of supposedly bugs in the system. So that's something to keep an eye on Tesla. Tesla obviously was on fire last week and was just an amazing stock to be involved with. I think even more importantly, the weekly chart is really where we just saw some amazing price action. Sometimes you drill down too deep onto the daily chart and it gets a little bit choppy, but you can see here we're constantly well bid on the weekly chart. Busted through the 900 level. It's actually up higher again today. So again, this is the difference between how do you read into the news before you buy a stock versus what happens after that. And interestingly, XPEV, which is one of the stocks that we pretty actively trade in the community every day, in the face of Tesla pulling their autonomous button that they had on the car, XPEV is actually launching a semi-autonomous driving feature in a direct challenge, moment to moment, to Tesla. If you happen to not be trading any of these other Chinese electric vehicle stocks, I know Tesla gets all the publicity. XPEV and NIO are the top ones that I have on my watch list and my radar. So, and LI is also another one. LCID has not really done that much lately, but those other three are the ones that I've been on top of the most. Something that's kind of from outer space. I don't know if anybody actually saw this article. This is a little bit weird. This is probably just for publicity because they'll never get it off the ground. They'll never get FAA approval. Is flying cars. It's just a little ridiculous. It's right out of James Bond. You can see that if this is actually a car, they're testing it over the water in case it crashes, I guess. But pretty interesting. Pretty interesting. I think this is more for publicity than anything else. So that's the deal with with Facebook today. All right. The earnings and year over year, they're expecting the monthly active users. Remember, we just said subscriber growth. Revenue, remember, it's not about the increase, it's the growth. That's what we're looking at, the percentage growth. So after the Facebook numbers come out today, you have in your journal right now, you know exactly what you should be looking for. It's the growth rate. So be a little hesitant to get involved as soon as that comes out. Give yourself a little bit of time to digest the numbers and then see what happens after that. I want to move over into what we pay attention to every day, which is why you came here today. We're going to talk about some stocks. Real estate doesn't really get us that excited. There's not really much volatility or anything along those lines. But there is SPG, which is a stock that has been pretty strong over the last, I would say, month or so. So let's hop on over to that one. I really want to get into two other sectors where there's been some better opportunities that have some volatility. You can actually see SPG is actually trading at some new levels here. The challenge with trading this as a momentum stock is that it kind of rallies and then does nothing for a couple of months. I do like this push and pause here, and I'm looking for this to actually take off from here. It's a reasonably priced stock at around $145. But what I want to focus on here today to give everybody some newer ideas is we'll actually dive a little bit into healthcare and industrial stocks and maybe even a little bit on the financial side. But something I want to point out is this sleeping dog down here, the energy, which was just absolutely on fire for a while, has cooled off, but I don't know where everybody else lives, but down here in South Florida, prices, they're continuing to go up. So keep an eye on energy stocks this week. They're going to kind of be a sleeping giant that haven't moved that much over the last 2 weeks. The money kind of went over to the sexy stuff, the technology stocks for a while. So you can see that actually we have pushed up, paused, pushed up, paused, pushed up, paused. And now we've kind of gone sideways. And even some of these other ones that we've been trading pretty dramatically have now pulled back for a couple of weeks. Keep an eye on them. Keep an eye on them. That's all I want to say. They're not in play right now, but this is actually something that we're going to keep an eye on for this week. They're not at the top of the list, but they are in play. Okay, I want to get that across. We're going to look at healthcare and industrial stocks right now. I want to make sure I provide enough value so everybody is keeping an eye on some new ideas. Let's see. Could you explain buy the rumor, sell the news? Yeah, I don't know if there's any other way to put it than FDA, than Pfizer. Pfizer is probably the poster child for buy the rumor, sell the news. We had this rally here, right? Rally. And then what happened here? What happened at the start of this massive 2-month decline? FDA approval. Buy the rumor on the breakout, sell the rumor when it comes out. Essentially, it's priced in. Something that we actually is actually, I gave you a little sneak peek there before, but a big part of what we talk about in our new New York method training, hey, Solomon's here, is the market's a discounting mechanism. The same thing that we just talked about with Facebook earnings and buying Facebook stock. It's discounting. It's pointing to the future. It's not talking about what's happening right now. So when the news comes out after a rally, that's where the sell the news comes from because it's already priced in. So a lot of what's going on in the stock market is pushing out or foreshadowing something that's going to happen, not what's happening now. The market and the economy are not linked together for right now. What's happening in the stock market and what's happening in the economy, it's not the same time frame. So that's what buy the rumor, sell the news is. Okay. So anyway, I want to focus on some of the ideas. I'm going to actually go full screen so I can give you a really good view of the charts. So we're going to go here. We're going to take a look at healthcare and we're going to look at industrials. And we've already talked about a couple of financials. We've actually talked about Goldman Sachs, which we said that 415, 416 level, which is actually right there, ironically. We've talked about JP Morgan and American Express, which had a big breakout last week as well. So those would be the top of the financial stocks. But I want to make my way over into some industrial stocks, actually. So on the industrial side, again, everything we do is following the order flow. CNI having a pretty good run. UNP having a pretty good run. And you know what? I want to point this out because this is something really important. Now, I understand why people ask the question, but I want to point this out anyway. You see this chart, right? Order flow is already there. Smart money is already building position. Smart money is actually already involved, and it's our job just to piggyback, pick a side, then pick a spot, right? Before we buy that stock, picking the side is the most important part, right? That's where buying is already happening. The only question we have to answer, which is tape reading, is are we buying too late? But I'd rather be on the right side and maybe my timing off just a little bit than be completely on the wrong side, which is guessing. So you see this here, and we're talking about sector rotation and being involved in stocks that have order flow. It's just a question of reading the tape and then managing risk with profit targets, right? So you see that, and then you see that. Very big difference in the quality of that idea. Could Zoom be bottoming out? Maybe, but which is easier to trade? Something that's rocketing higher versus, let's go to something like this versus that. Be smart. I told you, and we keep talking about this all the time, the hardest part of trading is prior to the trade. It's putting all these pieces together. Remember, you might want to write these 3 things down: stacking the order flow, tape reading, and risk reversal. Stacking the order flow means that we're putting together ideas where we can easily recognize smart money is in those ideas. And we actually had some good questions this weekend. How do we focus on the right stocks if we learn how to stack the order flow? And easily, the quickest way to do that, and we talk about this, is understanding the stock market power pyramid. I'll do this one more time so everybody can take a snapshot of it, is going right here into sector rotation. There's a reason that I walk everybody through this first thing every morning. It's because I want you to be looking at the stocks that have existing bullish order flow. Remember, we're here to talk about buying stocks. Doesn't it make sense where the smart money, the deep pockets, the people with all that research analysts and all that money who have the ability to make stocks go up and down? Doesn't it make sense to start with the sectors and the stocks that they're already buying, as opposed to saying, oh my God, Sava got crushed. It just went from 120 down to 60 in 4 days. It must be a buy. No. Smart money's dumping it. Why would you be looking to buy it? Be smart. Be smart. This is the difference between struggling and feeling like you got it. You know exactly what you're doing. All right, so we're going to work. I promised I want to make sure we talk about. So we're in the industrial stocks right now. RTX is another one where order flow is looking pretty darn good. UPS in this area as well. We've been talking about Caterpillar a little bit recently, but it hasn't broke this downtrend in a meaningful way. It has paused, but it's sitting right at resistance. If we pop in one of our key moving averages right here, you can see that it's struggling a little bit at that level, but something what we would call put it in the tracking journal. Then we have info, which is resting right at a breakout level. So that's a bunch in the industrial sector we're going to keep an eye on this week. Next, we're going to take a look at healthcare. Healthcare actually was at the bottom of the list, but as easily you can see, smart money is now starting to work their way up the list. By the way, I get a lot of questions about this list specifically, about the sector rotation and everything like that. I do all of the work for everybody in our community. So as soon as the market opens, this is the first thing I'm posting into the boot camp. I'm giving the list of the top stocks that meet the criteria, the sector breakdown, the industry breakdown, this bigger rotation in multiple time frames. And then I do a video explaining all of the trades that I'm looking at for the next day. So I get a lot of questions about people asking me how to set this up. That's kind of a proprietary thing that's behind the scenes, but I'm happy to share it with you every day. So if you're not sure what we're talking about this. So we're going to take a look now at some healthcare stocks and how the healthcare industry kind of perked up a little bit. The XLV bounced last week. You can see that it still has this longer term move to the downside, which coincidentally is the same time that FDA announcements came out and started to push down, but starting to wake up a little bit here, right? Starting to get a little bit interesting. AUPH is one that actually had a really big move on Friday. So we're looking for some follow through there as well. Abbott Labs doesn't have perfect order flow, but it had good earnings and it's bouncing off of earnings. CNI and CI. CI is actually at a breakout level. Cigna, we need to get through this level here. If we actually just get in there and work this chart, we need to clear this level, and then maybe we'll look for a gap fill up to 233. Let's see. UNH is obviously the big one. UNH, this was a kind of a no-brainer trade where earnings came out here, bullish gap, paused for 3 days, and then gave us 3 days of just awesome sauce. I don't know if there's any other way to put it. So really good price action there. Some of the more popular ones, Pfizer and Lilly, really not showing that much. So I'd stick to the first ones that we just gave you. You can see Pfizer here is still, even since that FDA announcement, we really haven't caught a bid here at all. Maybe we're at the start of something here now. But we remember what we talk about when we're looking at order flow. Is it 1 hour of buying, a full day of buying, 2 days of buying? How did it close during those 2 days? Did those 2 days translated to 2 weeks? We're watching to see how the smart money is building positions. And if we're smart, we build positions the same way as them. Don't go in there with full share size and scare yourself out of the position. If it's bottoming out and you think it's reversing and you kind of feel like you put those pieces together and you want to buy that stock, nibble. Take a nibble before you get in there with full share size. Get some feedback. Do you get a push and a pause, or you get a push? And take a look at this stock. This is a good example of what we're talking about. We talked about this last week. Roku, right? We said big move here, sideways, big move here, sideways. We said if you are looking to get involved on this breakout, which quite honestly, not that bad of an idea, if this pulled back on you, you should have been nibbling and you didn't get hurt. That's why we continually talk about position sizing. Not every trade works out. We're building that argument. But again, think about this position. You compare this to some of the other stocks that have been off to the races and going higher versus this stock, which has been selling bearish order flow for months. There has to be a difference in how you go after those stocks. This case here, we don't have confirmation yet other than a couple of days of buying. Could you get involved? Absolutely. Should you get involved with bigger position size? Heck no. This is one of those positions you're like, you know what? I'm going to put a feeler out there. I'm going to put a tier 1 out there. Jesse Livermore called it a probe position, which was his initial piece waiting for feedback. That's different from some of the other stocks that are screaming to the upside. So again, just keep an eye on this one today. eBay had a monster day on Friday, AUPH as well. So if you want to be a trader who lasts, actually John's saying UNH as well. We'll take a look at that one. UNH, yep, UNH was up almost $7 on Friday as well. So I heard a good quote this weekend that was actually pretty good. There are old traders, but there's very few old and bold traders. And essentially that means that you need to understand how to manage risk first. Then when you understand how to manage risk, you next get to the next step of understanding how to make money. It's not the same thing. Understanding how to stay in the game long enough to get enough experience to learn how to make money. It's two separate skill sets. And we talk about it all the time. Chart reading is not trading. What we're looking at right now is just talking about ideas. All the trading part happens between entry and exit and the trade management, the position sizing, the profit targets, how to manage a trade after it hits a profit target and squeeze out those bigger winners. Sometimes you should trade for momentum. Sometimes you should look for a longer term pull. That's trading. What we're talking about right now is setting up ideas and looking at the chart, but trading is a whole other level from that. And that's the skill part. All right. Let's see. What ideas do you have today? We'll finish up with some of the ideas you have. I have to get ready for our other meeting. Let's see. Andre is looking at Ford. We actually mentioned Ford last week. It's stuck at the 1650 level, the same way that GM is stuck at 59, hasn't been able to get through 59. If Ford can finally get through 1650, you can zoom out a little bit here. And actually, let's go to a higher time frame. You can see that it's got some room to go. But 18 is also a big level in Ford. So if you're looking for Ford right now, it's not a momentum trade. This has to be a little bit longer term position trade where 1650 is the first level. 18 is another resistance level. And then through 18, you got some room to go up into maybe even 30. So above 18 is a better level. If I was looking to put on Ford right now, it would be half of my position right now in the 1650 area. And I wouldn't add until it gets above 18 with some sort of energy candlesticks and volume. All right. Actually, we're going to finish up on CVS. That was one that we did not mention there before, but it is in the list. I'm going to zoom this one out just a little bit. And you can see here, it's got to get above 88. So it's actually trading about 50 cents lower than that right now. So CVS, the drugstore, not the energy stock, CVX. It's got to get above 88, but then you can see 91 is a little bit there. So you got two different trades. Day trade up to 91, swing trade over 91. All right. I actually have to head over. We have to get ready for our other game plan meeting in the boot camp. If you want to learn about the boot camp, definitely click below. There's a link in the description. Have any follow-up questions, leave those comments below in the video as well. And if you could please do me a favor, if you got some value out of this today, I want you to know how much I appreciate it. I mean, I love doing these calls every morning. We started them about a month ago. Do me a favor, just smash that like button, hit the subscribe, and make sure you hit the alerts so that you get updates of when the next call is coming out. All right. Thank you so much, everybody. I'm very, very grateful that you join me here every day. Hopefully, we're forming a nice community here. You want to take it a step further, just click below and learn about the boot camp in the description. Actually, I just want to pull this up from Tom. Tom, I want you to know how much I appreciate that. I get asked all the time. I get emails all the time about people asking about the boot camp. People who are in the boot camp can say it in a different way than I can. Of course, I think it's awesome because I think we have a great community. So, Tom, thank you so much. I really appreciate it. Okay, everybody, have an awesome day. I will speak to you soon and be great today. Take care now.